The real estate market can be quite complex, and it can vary from region to region. You need a professional, experienced team that can help you navigate the real estate market and achieve your goals. Find Dan Gemus and his team online at dangemus.com. Now, back to the Dan Gemus Real Estate Show.
Okay, welcome back. A half hour to go with you here on the Dan Gemus Real Estate Show, with you on the air every Saturday and Sunday from noon to 1. 9 years on the air so far. Crazy. Wow. Crazy. Time flies. Yes. Joyce Blackmere, Aaron Blackmere in studio today. Thank you all for joining me. Appreciate it. And it's time for our mortgage tip. We're going to talk with Troy DeToe from the Super Mortgage team. Hey, Troy, how are you?
Hey, I'm good. How you guys doing?
Well, fantastic. Awesome. Thank you. So there are definitely some benefits to utilizing the services of a mortgage broker versus your bank, are there not?
Absolutely. And I'm a broker, so this may have a little bit of bias on it, but there's a few main points out there, and there's this misconception that if you're working with a broker, it's, maybe you couldn't get approved at a bank because you have group credit or lower income, or that we have huge high fees or we have bad rates. But one question for you guys: what's the most important factor for you when you're referring one of your clients to financing?
Service is huge.
Yeah, service
by far is one of the biggest. Someone that's available, someone that can answer questions. Aaron,
communication.
Yep.
Communication. Yep.
Awesome. And that goes underneath the service umbrella. And it's funny because I have some notes written here. Number one is service, right? So as a broker, we're experts, I guess you could say. We're licensed. We actually have to do exams, multiple exams now that we have an agent level 2. And majority of us come from banks, and we have a little bit of banking background. So the service is there. I like to say it's kind of a white glove service. We're 24/7. We're always available for you. A lot of lenders, we can get the deal done within 24, 48 hours, which, gives that speed and gives those answers. And, commission. If we don't get that deal closed, we're not making any money, right? So that's the top thing we're looking for is service.
Now, I know oftentimes buyers, the first thing that comes to mind when they look to shop for a mortgage is the rate. That's all they care about is the rate. There's more to care about than the rate, isn't there?
Absolutely. It's what gives you the peace of mind with you sleep at night. So someone will come in and ask for a variable or fixed, and sometimes that's not the best product for them or the best rate for them. Also, some people, maybe your business yourself, maybe you don't claim as much income as you should, and they'll come and say, okay, I don't want that higher rate with alternative lending. It's like, well, let's be honest here, you didn't really pay income tax the last couple of years, so if you got to pay a little bit more in interest or a little bit in fee, it is what it is to get the deal done. So, and a lot of people cash flow. Cash flow is the main thing right now. Like you guys were just talking about renting and all that stuff. Like customers, it's tight out there, especially if you only have one income. So you're definitely looking for what's the best for you. It's not always right.
Yeah, no doubt. What other tips, Troy? What else stands out there?
Yeah, for sure. So brokers, we have a wider range of lenders and products that suit everyone. So, I mean, if you're going to a bank, the bank's going to have their products, you're going to have their little square box. But when you come to a broker, we can use anywhere from, a big bank, TD, Scotiabank, we can use WFCU, all the way right down to private. So we have that wider range for you, and we can get it done for you.
That's a good point, Troy, because oftentimes, traditional lending won't work best for the client. And so you have other options that, might be short term, like you said, private lending for a customer, right? That it gives them the opportunity to get their stuff together, their stuff in order for, let's say, a year, and then you can switch them over to a more standardized product.
Absolutely. And you know what? When I first came into the broker world, it was more like, I kind of ran out of money building this house because, everything went up the last 2 years, and the bank was maxed at their 65% loan to value, and, they needed a little bit extra money to get that deal done. So, jump in for private, and, not even a year, 3 months, 4 months, 5 months, and they at least had enough money to get it done, and then they could refinance after that.
Yeah. I love the creativity behind it. I love the willingness to work the numbers, look at the different scenarios, and figure out how to put the deal together that's in the best interest for the client to make sure that they can reach their goals, whatever they are, long-term, short-term. If it's real estate, it's probably more long-term, but still, they have that opportunity because I've had experiences myself with just a traditional bank where it's like, okay, does anybody want to work to do this, or like what,
Right.
What's the
exactly.
deal?
you know what? There's some cons working with, some pros working with banks too. Like, I mean, you have everything all in one place. You have the comfort of working with that advisor you worked with, your parents worked with, and peace of mind that you're working with a really large institute. But, you know, you also have the, you know, only open 9 to 5. You might be working with a new advisor who, you know, everyone has to start somewhere, but was the training there? Was it in place? And they also have some tighter guidelines. Someone could be on vacation. You know, there's many things there where a broker, we're open 24/7. And we're always there for you.
We've definitely had a lot of clients over the years that have had some horror stories where they've been in touch with somebody and they're just, like you said, they're on vacation and they forget about you for 2 weeks and there's nobody to call. It's, you know, or it's somebody that is behind the counter that doesn't really do mortgages, but they're doing their mortgage. They don't really know what they're doing. There's we've seen it all over the years.
Absolutely. I could only imagine. You know, when I first started as a mortgage specialist with TD, I went out there pounding the pavement, and you know, it was a lot of horror stories. Like, oh, I had this customer last year that did this, and it's like, okay, well, you know, we're trying to move away from that. But yeah, it was. I went into the bricks and mortar retail, and you know, just someone dropped the ball, and it was a bad experience. It's really hard to earn that respect and that trust back, right? So.
Well, and like you said, especially if you don't have someone who's dedicated to just mortgages and that's their job, and their job is to get the deal done for the client. It can just be on the back burner. And okay, you know what? I'm doing a credit card application today, and I've got that mortgage I have to work on too, and you know, I'm not going to open a bank account, whatever it is, right?
Yeah, and I remember, you know, I was a manager in TD as well, and those tougher deals would always get, you know, on your list of to-dos, they'd get to the bottom, and then they'd go to the top the next day, and all of a sudden they'd get trickled down to the bottom, and, you know, those tougher files get pushed away just because they didn't have the confidence to do it. So, not to sit here and just bash banks anyway. So, you know, I did that. No,
for sure.
So definitely cons.
As a mortgage broker, you guys have access to multiple lenders that you can shop around for the client, correct?
Absolutely. We have, you know, you can call them AAA. We have the big banks. Then you can call the model lenders where, you know, they don't have the bricks and mortar, but they're able to offer you a good rate, and it's still an A lender. And then we can move into alternative lending, which I kind of talked about business for self or a little bit of a bruised credit, where typically you're only going to be 1.5%, maybe higher. You might have to pay a 1% fee, 1.5% fee, but they're easier to get approved. Then we have, you know, all the way down to private, where, you know, they can get super creative. You know, but private got a little bit scary because they want to make sure there's enough equity, enough skin in the game out there, because what you guys were talking about earlier, prices are starting to come down. So you don't want to be caught out there, you know, with too much exposure.
No, 100%. Yeah, it's definitely, you know, an issue that we want to be careful with as time moves on, right? Now, obviously, in Canada, we have a lot of safety nets that have been put up, you know, over the last, decade or so to kind of really help insulate the country from any issues such as the ones that happened in the late 2008-9, right, in the States.
Right.
So that's good.
Yeah. So they put in, you know, the stress test, which was it was tough, right? When the rates were 1.5, and you had to qualify them at 5.25. But now, you know, you have to qualify.
This is the exact reason,
right? Yeah.
This is it. This is the reason they did it.
It worked. Yeah, exactly. And we don't have 35-year mortgage. I mean, we can find 35-year mortgages, but typically you're 25 or 30. So they definitely put some good stuff in place. I know that, like, a mortgage incorporation name, like a holding company that's going to buy the properties, they're really strict with those. And then also the foreign tax credit or tax, which is, you know, we were seeing a lot of that come in, like customers calling and wanting to buy a house that don't live here. And it's like, okay, well, you have to pay X amount of dollars before you can get that house. And that's shutting it down pretty quick as well.
Troy, off the top of your head, the stress test makes them qualify for how much more over the rate?
It's 2% higher. So
2% higher.
If your rate's 5.49, you have to qualify at 7.49.
7.49. Got it.
Yeah.
Okay.
Do you anticipate, with the increase in the rates that we've had, many over the past couple of years, do you anticipate that they'll peel that back?
I don't think so. I think it's worked. I think it's working to actually bring it back. You know, if they see the rate staying at five, you know, over 5 for the next 3, 4, 5 years, maybe they'll bring it back, because that's kind of where that threshold was before. But for now, I don't see it moving.
It's an interesting question, Joyce. Yeah. You think as the government's trying to find ways to help people, you know, get into homes, right?
Yeah.
Something, you know, you never know. They might look into it. Troy, awesome tips today. How does everyone reach out if they have any questions?
Yeah, definitely. Can I post something on the website?
Sure.
Give me a call. Facebook. I got
Yep.
everything.
Yep.
Everyone. You just Google Troy Dudo. You'll see me come up, and would love to help out. Even if it's questions, second opinions, I'm always available.
Awesome. Thank you, sir. Appreciate it.
Hey, thanks everyone. Enjoy your beautiful Sunday. It's beautiful out there. Should be golfing.
You there you go. Not a problem. All right, that's Troy Duto with the Super Mortgage team. Some great information there from him. But, the stress, it's a great question, Joyce, because really the stress test is making you qualify for 2% more.
Right.
I would think that'd be a way that the government would ease some pressure.
For sure.
Say, okay, maybe it's going to be 1% more as opposed to 2%.
Right.
To try and take some, and make it a little bit easier to qualify.
I mean, unless they anticipate continuing to increase the rates.
I cannot imagine.
Right. That's what I mean.
It goes up another percent, maybe another quarter point, maybe another half point, but another 1 or 2%. I can't imagine. That'd be bad.
I think they should. I don't know, but should they keep it there all the time? I think because then it's gonna help
keep
people.
the rate there.
The
stress test.
The stress test.
Well, again, it did what it was intended to do. Right. It protected a lot of people from some very serious harm. Had it not been there over the last couple of years or last year, it would have been bad.
We're still going to need that moving forward. I still think at some point some people still need a little protection because I found during the crazy times there's a lot of people in competition maybe went a little higher than they should have.
Yes.
So maybe they should still qualify for that stress test part. Keep it there just to keep everybody out of trouble.
Look at Aaron watching out for everybody.
Yeah.
Hey, guardian of the house buyers.
Me and Joyce let's make it easier for people. I feel bad for them. It's fine. Let's help them get into a house.
And then there's logical Aaron.
Yes, exactly.
Oh, my goodness. Okay, we're going to take a break. We're going to come back. We'll give away the gift card for the Richmond Popcorn Company. If you haven't already entered, you can text the keyword FRESH, 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 with your first and last name to 10800, and you're automatically entered to win. We'll come back and talk about some things to consider when moving. So lots more to come right here on the Dan Gemus Real Estate Show.